Welcome to the Manning Up on Real Estate podcast. This is the podcast where we will have real talk on what is happening in the local market of Greater Vancouver. Here we'll discuss the news, strategies, and interviews to help you man up on your real estate career. I'm your host, Cameron Manning. All right, ladies and gentlemen, welcome back to the Manning Up on Real Estate podcast. I'm your host, Cameron Manning, and today I'm being joined in the studio by the JV Jedi himself, Mr. Russell Westcott. Russell, welcome to the podcast.
Hey, Cam, how's it going? So first of all, Cam, before we dive into it, thank you for having this live and in person. I've actually done 3 today, and I've actually had to put pants on for this. So if it's too much information, just let me know.
We might just edit that out. It's
exactly.
Okay. Well, I'm glad you got your pants on. I'm glad you're here today. I always like doing these things live when possible because then we get more, get into a deeper conversation, right? So I'm excited. For those of you who don't know Russell, maybe just tell a little bit about yourself. What got you started in real estate? Kind of what was the beginning of Russell Westcott, the JV Jedi?
Oh, man. Well, before I do talk about that, and I will answer the question, but I always deflect a little bit because it's one of the hardest things to talk about is yourself, right? So tell me about yourself, Russ. And right. So before I do answer that, I just wanted to congratulate you on your podcast and the launching of that. And, there needs to be more good resources like this, the unbiased truth and things that are going out there in the marketplace. So just want to give you a virtual and a real life high five for doing and providing a wonderful service for real estate investors.
Appreciate it. Thank you so much.
So I guess my story, let's talk just around the context of real estate. I had everything going for me to get into real estate. If you think about it, I'd lived in a trailer park growing up in small town Saskatchewan. I'd never lived in a house until I was probably 16 or 17.
Really?
We moved into the big town that had 1,200 people in it. When I was university and left university, I was renting. When I first moved to BC, I was renting a basement suite and with a roommate, and I'd never owned a place in real estate ever in my life.
Oh, wow.
Right.
Yep.
And so, I joke that I became the bug of real estate got within me. So if you think about it, I had everything going for me to become a real estate investor.
Right.
Right? So it was right around the turn of the century. And I joke, laugh, turn of the century. So I was right around the year 2000 where I got the bug where there had to be something different. So my pivotal moments for me were essentially like everybody's story. Oprah was actually a pivotal moment for me, and a milestone birthday. I actually just turned 30 around that time, and I was suffering from a Peter Pan syndrome where I just didn't want to grow up.
Right.
So eventually I had to.
Well, we all feel that once in a while.
Well, what do they say? Growing up is mandatory. Growing old is mandatory. Growing up is optional.
I would totally agree with that.
So I watched an episode, and the dates are. I'm not sure if it's exactly when it was, but I remember seeing Robert Kiyosaki on Oprah.
Okay.
And he shared the Rich Dad, Poor Dad book. Yeah. And it's amazing on how many people got their origin stories from the Little Purple Book.
Yes,
right?
You hear it a lot, but it's truly a pivotal book for a lot of people. For those who haven't read it, it's a highly recommend from almost all investors, right? So what I did from there was it actually inspired. It was a seed of inception for me that I wanted to talk about this whole journey. So what's the first path of least resistance when you want to talk about passive income, right? I'm using the air quotes here because nothing is ever passive. Not truly.
So I went out. First person I talked to was my mutual fund salesman. Okay. And, they didn't have much to offer. And then I just doing some research online. I saw a workshop that talked about making money in real estate. So I went out to that, and that was actually the first time I had ever seen an introduction into real estate. I met a fellow by the name of Darren Weeks, who was putting on that event, the Canadian Rich Dad, I guess he branded himself. And at that time, I met Don Campbell, who was doing a presentation on the top investment places in Alberta.
Perfect.
And so, from that moment on, that was kind of the seed of inception, and I jumped in with both feet. I decided that was the path I was going to go down, and from there, I just surrounded myself with the experts. I surrounded myself with people that were doing. I would just be like a sponge and just pick up and learn everything I possibly could. At the same time, I don't have the exact number, but I guess it would probably be close to $90,000 to $100,000 a year I invested into education and personal development and training and real estate. And I went all over North America learning how to invest in real estate.
Just going all over, just soaking it all.
Just soaking it all in. But here's the thing is, and I'm a real estate educator, and I love teaching, and that's what's part of what I love to do. The best education you will ever get in real estate is actually to do it.
Absolutely.
Right.
And that's kind of the big thing behind like the Manning Up podcast,
Yep.
is to man up and just get out and do it, right? Go take action, because there's two types of people in the world. There's those who will invest and those who want to invest, right? People will go to seminar after seminar after seminar, and they'll be so knowledge rich, but they won't have a dime in their bank because they haven't implemented it, right? So you took that knowledge, you surrounded yourself with the people, and you went out there and you did it. And you did a lot of it through joint venture partnerships, correct?
Well, I had no choice.
Right. So take us through that. So like what was your first joint venture? Tell us what the deal was like.
Well, so just to complete the story. So
Sure.
I had no choice because I had no capital. The only thing I really truly had, I joke around, I didn't have anything going for me. I had a job, I had a T4, and I could qualify for mortgages.
Right.
But when I looked at the bank accounts, the largest number I saw was attached to a Visa bill. I had a very large car payment. I joke around, it's the SVT Mustang Cobra convertible. Thing would fly down the road, pass everything but the gas station, top down, wind whipping through my fingertips, right? So I'm bringing out all the old stories here for you, Cam.
Yeah, appreciate it.
So I sat there and I was missing the down payment. Right. And then all of a sudden the answers to me came in the form of one of the most unlikely source, again, was a cassette tape recording of a fellow by the name of Arlen Dolan. Okay. Arlen Dolan is a veteran real estate investor in Alberta who put a little presentation together called joint venturing. And honestly, that was my only choice, was to learn how to raise capital from others, because I didn't have the capital myself and I didn't have the family that I could go to as well until down the road. So I made that choice to study from people that were doing it, study for the best of the best, just ask lots of questions. And then eventually, somebody who I was working with, someone who I was doing lots of hiking with, we would just have lots of conversations, and we talked about real estate was one of them. And he just saw the commitment I was making and the investment I was making in myself and the willingness to do the work and get my hands dirty. And he saw the passion and enthusiasm that I was doing. And I just put it on the table. I just floated out a simple townhouse opportunity in Edmonton, Alberta. And I think it was $42,000 in that he had to put into it. Yep. And you know what? I'd never bought a place in my life. I'd 100% open and honest and transparent about that. And you know what? He took a chance. Perfect. And he just said, I saw the passion. I knew you were going to do what it took to make it successful. And that was the first one. And then from there, it just rippled out from there. And I've done 19 individual joint venture relationships up to this year. And I've actually just entering into 2 more for this year. Not all of them are still there. We've wrapped some up, and some have grown, some have sold off. But I'm now entering into 2 more larger ones this year that we're going to actually take it up to the next step and doing some development projects. And we're going to build some side-by-side duplexes and 4plexes and 8plexes and fun stuff like that. So
that's incredible.
So that's 16 years. That was my first place was 2002. And my last place was July of 2018.
Right. Yeah. Excellent. So you took that concept saying, okay, I don't have the money, but there's an opportunity. And so really joint venturing is about showing people an opportunity that if they not only invest in the property, they are investing in you to help them generate a return, right? Yep. So, but take us more. There's a lot more to joint ventures, right? There's some different levels of it. Tell us what a typical joint venture looks like for you.
Well, here's the thing. So a couple things. I have conversations literally every day with people if they're stuck or just wanting some help. One of the things people think about, it really starts with the mindset. A lot of people will come out and they'll say, well, how do I convince somebody to give me the money? Right. And I tell people very clearly, get that word convince out of your vocabulary. You're not convincing nobody of nothing. Right. What you're doing is you have a specialized knowledge. You have an opportunity to offer to somebody to participate with you, and you're helping them. You're a service provider. Absolutely. Helping somebody else's financial future. I like that. That's completely different than sitting there, I'm trying to convince somebody to give me $100,000.
For sure.
Right?
And it's a different approach, and you actually feel different about it too. When you feel like you're actually providing value, you're providing something to someone, you're going to go into that meeting a lot more confident than you would saying, okay, I've got to do some sort of a mind trick and get them to do it.
Yeah.
Right?
Well, here's the thing. It is 100% the intention of every time I will sit down kneecap to kneecap with an investor, my intention 100% is to help that person fulfill upon what they're looking for.
That's awesome.
And if it means that I don't participate in the deal and they can do it themselves, and I'll refer them off to an amazing realtor and an amazing property manager and a mortgage broker, and they do it themselves, I have no problem doing that, because my number one goal is to help them. Right. And that's why most people will have investors come to them after the fact, or they'll keep having people come to them, is because you're helping them. Right. And it's funny. We'll get more into some of the nitty gritty, but I just want to share a context for people. Some people, most real estate investors that are probably watching this, you're sitting there and you want to help everybody, right? You think you have an amazing deal, you have this incredible opportunity, and you're going, why doesn't everybody want to invest with me, right? And you get a little frustrated and you get a little discouraged. And here's the analogy I use is, so you're educating yourself as a real estate investor, and you're got a specialized knowledge to help people. So here's the analogy. You have a helicopter, and let's say you're the Coast Guard, and you're out there, and there's a whole bunch of people floundering around in the water, splashing around. They have no idea what they're doing. They're just financially stuck, or they just need help. They need to be saved, in essence, right? But you only have 3 seats on your helicopter, and there's 100 people in the water, right? Who do you help first? And that's a question that you always do and ask. And the answer is, the person you help first is the person that actually starts swimming towards you, is the person that you help first. Right. So it's important that you actually qualify and filter people that first want to be helped.
Absolutely.
And then what you do is you help that person. And here's the best thing about it. As that person is swimming towards you to be helped, other people are going, oh, that's the direction I need to go. I need to keep swimming that way. Now, all of a sudden, when I get investors and real estate investors to crack the code and get that first joint venture partner under their belt, it's amazing how quick the next one comes and the next one comes, because they see the people swimming towards them, and they can actually start helping more people. So the best lesson I can share with you right now is to only help people that need help.
And want to be helped. Yeah.
And they actually have to make a commitment to start swimming towards you.
And I think that really ties back into what you were saying before, the convincing. You know, going back to that analogy, the helicopter, if you fly over the one guy who's just floundering there and you're trying to convince him to get into the helicopter, how does he know that you're even there? Because he's floundering. He doesn't know what's going on.
Yeah, and they might even pull you down.
Absolutely.
You've had some training in that whole background as well, right?
I have, yeah. And, for those listening who don't know, that was my profession before coming out to BC. I was a lifeguard. And I had to do a few rescues. But, if you're not properly trained as an investor, just like as a lifeguard, you could be pulled down with the people surrounding you as well. So.
But then you truly only can help the people that want to be helped.
Absolutely.
Right.
Absolutely.
So that's just an analogy I use for people to just give them not hope, but sometimes people get a little discouraged that they have so many things and so many opportunities, but people are just not listening to them. Right. You don't need everybody listening to you. You just need a few to start.
And I think the big thing is too, with real estate specifically, is when you walk up with a real estate deal, and let's say it's just a really average buy and hold, most of those deals are showing anywhere from like 20 to 25% returns when you factor in 3 different sources of returns. And the average person out there is, I don't want to say trained necessarily, but they've grown up looking at savings or other mutual funds that are generating, 3, 4, 5% returns. So again, their mentality, their training is looking at a safe investment will give you 2% return. Whereas we're coming up with a deal and saying, well, there's more out there. Here's a deal that's going to give you 25% return per annum. And suddenly they're going to close off because they're not looking for that opportunity. They're not really there. And they said that can't be. But those who are out there who are actually looking for something more, well, they're the ones that are going to be like, well, yes, show me how it's done. Right.
Well, you hit the nail on the head. And it's funny, we just had a webinar with a group of about 50 real estate investors the other night. And we were talking about RSP mortgages, how to use other people's RSPs to invest in real estate.
Right.
And the stat was shared that the top 10 mutual funds in Canada, the top 10, the best of the best, after fees, returned about a 6.1 to 6.4 return. Return. That's the top 10. 10.
That's top 10.
Right.
So they're not even cracking those double digits.
Right. So if you can't, and then here's the most natural conversation.
And that's probably before fees too.
That's post fees.
Oh, that's post fees.
Yeah.
Okay. So that's the top return. Okay.
And it's one of the most natural conversations you can easily have with somebody. If you sit there and you have a conversation, I'm going to take a story out of someone in your office here, Kelly, who one of her best places she found a lot of her investors was picking up the kids from school, right? You just have a conversation with people about how long have you lived in the area, where have you been. If you know somebody has lived in the area for 7 to 10 years, you can almost guarantee their house is more than doubled in value.
Oh, for sure.
And they're
especially
sitting on, especially out in this market where we're at, they're probably sitting on $700,000-800,000 equity, pending if they've ever refinanced or stuff like that. So here's the beautiful thing is you can have a conversation with somebody. How well did your home do for you?
Exactly.
And they'll tell you the story. Yeah, man, it's doubled in the last 3 years. And then you'll have the conversation with, would you be interested in learning how to buy another property and have the tenants pay it off? You know, it probably won't do the exact same return on appreciation, but would you like to own another property that somebody else pays off for you?
Yeah, for sure.
Easy conversation.
It's super easy. And then what I like about it too is for most investors, when they actually take it and break down the centers of return, that adds up to that 20-22%, whatever it is. That's where people can start to really understand it. Because again, I always use the analogy of the 3-course meal, right? So real estate being a 3-course meal, your cash flow is your appetizer, tides you over. You're not going to get rich. That's your 0.5 to 2%, right? Then you got your main course. That's the equity that you're building. That's where you're going to make your biggest return, 7.5, 8%, depending on your interest rate. And then obviously the cherry on top, that's the dessert, right? That's your appreciation, which you don't always get because sometimes you're full after your main course. But at the same time, when you do get it, it's a nice little sweet treat, right? And I like that one because it breaks it down and then it shows to me when I'm talking to a JV partner, this is where we are getting this overarching 22%.
And I agree. Here's one of the things that, as much as I'd love to have rapidly appreciating marketplaces,
for sure,
it also sets unrealistic expectations for people. Because you sit there and you have a conversation with a money partner and you talk to them, guys, we got to be into this for the long term. It's a minimum 7-10 years. It's probably going to be a full term 15-year hold. But sometimes people get impatient.
They do,
right?
Especially when they see the numbers are skyrocketing, right? Well, we've already made all this money. Why don't we just cash out? And you're like, well, no, it's a 5-year hold. Let's keep that and continue to get the equity being built up too, right? So,
and as you alluded to, mortgage pay down alone is a wonderful. Let's put it this way. I use the analogy: if you actually, let's say you bought a townhouse out in the area. $425,000, just give or take. You were able to have it cash flow. You were able to make it break even. The money that it made in cash flow, you reinvested 100% back into it.
Right.
Okay.
You had extra mortgage pay down.
You had aggressive mortgage pay down. You had, maybe it was a new construction and there wasn't a lot of repairs and maintenance. You sunk a lot of that into aggressive pay down. If you actually follow a really rigorous system, you can actually have that paid off in 15 years, give or take.
Absolutely.
Right? And let's say the property did not appreciate $1.
Yeah.
Okay. At the end of 15 years, you have a $425,000 asset.
Yep.
Okay. Which no tax will be paid because it didn't go up in value. And your cash flow on that place, let's assume that you were, say, $1,900 a month. You're getting a $22,000 a year income stream.
Yep.
So in 15 years, that place could be worth $425,000 and a $22,000 a year income stream.
Yeah.
3 properties,
fantastic.
You got $1 million portfolio, and you got $75,000 of income.
And then for most people, that's more than they earn per annum in a normal job.
And that's with 3 properties.
3 properties. Right? And that's, again, not assuming any
appreciation or anything. That's just a ho-hum, hold it, pay it off in 15 years.
And in all honesty, for most of us, people get really shiny object syndrome sometimes, and they look at those big gains and they want to cash out on those big gains. But then again, when you cash out on those big gains, most of the people out there are going to turn around and spend that on the vacation or the boats.
Keep refinancing and keep pulling equity out.
Exactly. Whereas, when we look at it, especially like even if you're in your 50s or 60s and you're starting this now, you still got a long time left to live as long as you're doing the right thing. And that could go for, that's your future retirement, right? So that'll help supplement you in the future. That 450,000 can go a long way. You own multiple of those, huge.
Here's the thing is, I think if you take 425,000 over 15 years, I believe is something like $1,200 a month. So how many people out there right now are saving $1,200 a month post paycheck or post whatever you're doing and putting that aside?
Very few.
Here's the thing is your tenants are the ones that are doing that for
Absolutely.
you. Right? So
Absolutely.
you're actually not even making that contribution. The only contribution you made was the $80,000 down payment.
Yeah, and that's why it's called a return on your investment.
Exactly.
Absolutely.
Right. So wonderful. It's one of the greatest wealth generators out there. However, sometimes people get a little misnomer that they think that they should be, living off their income from their properties on a day-to-day basis.
Totally.
And I'm as aggressive as I know of investors, but a lot of people actually don't ever give consideration to what's the payback strategy. At the end of the day, you still have to pay the asset off. Right. It's one thing to just keep leveraging and buying more and buying more and buying more. That's wonderful. Okay, what's the plan to pay it off? Right. And maybe I'm only telling that because the lens of I've got a lot of gray hair and I'm going to be turning 50 in the next little while. And
got some experience.
Got some experience on that, right?
Yeah, absolutely.
Some of the biggest mistakes I made was pulling equity out on properties to go buy more properties. Right.
Now, actually, it's a good segue because I wanted to talk a little bit about we've had Russell on stage at our monthly meetings, and you're very open about your growth at the same time the mistakes you made. And recently Edmonton in the last few years has not been doing as well, and I'm in Edmonton, you're in Edmonton. We've both suffered a little bit. So tell us a little bit about the mistakes you made in the portfolio and how you've grown from there, and what your new investment strategy is that you've been now talking about.
Yeah. Well, the first thing I'm going to say about mistakes is actually I think they're
learning.
They're the course. They're the required barrier of entry. You actually have to pay the price to get in, and you have to actually make the mistake.
Absolutely.
Right? Because quite frankly, I wouldn't have learned what I know now without making some of the mistakes. Some of the biggest challenges I made, mistakes I made, were I bought quantity over quality. Right? I didn't give a consideration to the tenant profile. When I first bought it, I just gave a consideration that it was cheap and the area, and look at this pro forma, it's cash flowing at this number of X. And that's all I considered.
Fast and go.
Yep. And then just how many of 9 of 10 of these could I buy? Right. What I have learned over the time and years is I've fallen in love with buying brand new construction properties, considering that if they work, the numbers have to first work.
Absolutely.
And also, the number one criteria you must analyze first is the tenant profile. You must do, and it's called the thing I train is it's called the 3 pillars of real estate. It's what you buy, where you buy, and who you rent it to. And of those 3, who you rent it to is the most important. For sure. Which then determines where you buy and what you buy.
Yeah.
Right.
Yeah,
so you get the tenant profile right, then you match the area and the housing type to the tenant profile. And very, very few people will ever, if I ask them the question, they'll ask the question, well, what type of property should I buy? My first question is, well, what's your tenant profile? They go, well,
what kind of tenants do you want to have?
I don't know. It's like, what kind of tenant do you want, and does it match the area, and does it match the housing type?
Yeah, it's a huge difference because I think most people go the route of, oh, look at this property. It's going to cash flow more than those newer, nicer ones. Yeah. Right. So they make the mistake of looking at the appetizer as the main course. Right. They want the $300-400 a month cash flow, but again, you're going to have the higher tenant turnover, more damage potential because property purchase is low. Cash flow might be high, but risk is a lot higher too then. Yeah,
here's the thing is I consider there's 2 costs to owning a piece of real estate. There's a financial cost and there's an emotional cost. And everybody's going, well, yeah, it's business. Take emotion out of it. Okay, let's be real. We're human. We're human beings. We have emotions. So
that's always going to be there.
And we're not robots. We're not the Borg going around there. We do have emotions, right? So the one thing is 100% make the decision based upon the financial numbers and make the decision there. But at the same time, is it going to be a good ownership experience? Can you absorb some headaches when a tenant turnover comes around? Are you able to rent it quickly? Is it easier to own than owning a place that, and I'm going to share an example with you, real life example. I might be dating this, but we're January 2019. I've already had 3 abandoned units this year alone.
Wow.
Across on my portfolio, right?
And this is abandoned units in some of your older portfolio.
And here's the thing: none of the tenants ever abandoned the brand new, nice and spit and polished ones that are ready to be rented out tomorrow. Right.
Sure.
Each and every one of them had to be, I'm having the conversation. We're doing an assessment. Each and every one of them is minimum probably 10 grand to paint and flooring and clean up and some doors. And some people, unfortunately, when they leave, they don't go out quietly.
No.
Right. So
might be in the middle of the night, but they're still making a ruckus.
Absolutely. Right. So, and I'm not saying new construction, brand new properties, you'll 100% eliminate that.
Yeah.
But you have if you've screened the tenants and the tenant profile is a little bit of a better tenant profile because it's a better house, a better quality house, you have a lesser of a chance of that happening.
Right. It mitigates that risk a little bit.
Yeah.
Absolutely.
Yeah, and I'm going to just share some real life numbers. I have a business partner in Edmonton who he has a portfolio of new places, and they're all within 5 years of brand new construction. And his maintenance bill on 17 places, maintenance bill 17 places 2 years was less than $3,000 for 17 places for 2 years.
Wow, that's more than
that's one place that I have minimum, right? Of
That's
some of the older
huge.
stuff.
Yeah,
right.
That's incredible. So I mean, there's some serious advantages, and I know this is what route, but you're not just going buying these properties now. You're getting involved in a little bit more of a scenario, helping develop and do different things. I think one of your projects is out in Leduc, Alberta. Yep. Tell us a little bit more about the development, what your goal is with these development properties.
Well, here I have a business partner boots on the ground in Edmonton who's just a whiz. He's amazing at just scouting out deals. He's a deal hound. He owns his own brokerage, and he's in the market on a day-to-day basis. And what he's out there doing is he's just finding deals, and he's building relationships with builders, building relationship with developers, and he's just finding amazing product. Right. My goal, and one of the things that I do, is we all stay in our lanes. My goal is to get out there, do education, and inspire people to take action. And my goal is to raise some capital. Right. Because that's what I do. Right. I'm out there looking to raise some capital, and I have some money partners that are chomping at the bit, ready to go into some projects. And at the same time is, if someone is inspired and they want to take some action and they want to get into Edmonton, I'll refer them on, and here's some good opportunities in Edmonton. Right. But at the same time, I'm also building a network of people that, the Western Canadian Properties Group or Ontario and different places to refer people to good people that I can trust. Absolutely. Right. So to answer your question, we're out there just scouring the market because there's been some changes in the Edmonton marketplace that you can put side-by-side duplexes, you can put suites in it.
Okay, yeah. So we're essentially a fourplex.
A cheater four. And I think James Cannell coined that term that I really liked, is putting that there. The other is we actually have a model that we're looking to do is you can actually do a stacked, almost like townhouses, back-to-back townhouses. Okay. But they're duplexes, all stacked, but then you can put suites in it, so essentially you got an 8-plex.
Okay, so 2 in the front, 2 in the back,
and suites. Yeah, you have an 8-plex, and we're
basically on one lot.
On one lot,
wow.
one title, one mortgage.
Very interesting.
So you can have 8 units under one residential mortgage. So if banks are putting up a big stink and you can only get the quote unquote 3 or 4 or 5 or whatever mortgages, there's one mortgage. You got 8 units, right?
Perfect. That is definitely, and this is kind of the neat thing about, looking at development 2019. There's so many unique things that are coming out there from the perspective of, investment and cash flow, right? Like we're noticing, I was talking to an investor recently doing these $1 million townhouses in Vancouver in an area where the average house is $5 million. So it allows people who aren't in that 5 million category being able to move into an area more affluent for $1 million, right? Yep. Now again, those are bigger numbers because it's Vancouver, but it's neat seeing all these different nuances coming up on how to make properties more affordable, and at the same time create opportunities for investors who are able to take advantage of it, right? 8 units for the price of one.
Well, here's the thing is, so one of the things we're doing right now is we're breaking ground. We're actually doing it. My business partner is breaking trail. So we're just really getting our costing down. We're getting the costing down. We're getting the system down. We're getting the construction down. We're getting that down to get our official cost. But the preliminary numbers are coming in that those things are going to be like $1.2, $1.3 million. And they're renting for $10,200 to $10,500, give or take.
Right.
So those numbers work.
Absolutely.
Right. and
That's
from
fantastic.
especially if it's a residential mortgage and it's one title. So that's on the 8, but you can also get into a side-by-side duplex with suites for $860,000.
Yeah, that's huge change for what's in the market today.
Yeah.
That just blew my mind. I'm sitting here and a bit in shock. That's awesome. So a couple quick more questions that I have for you here today.
Certainly.
First of all, how did the JV Jedi, the brand, the name, tell us about the JV Jedi? How that came about?
Well,
there's always a story.
There's always a story. And there's actually a really cool story behind this too. So interesting to note, the person who first coined that name was a fellow out in Ontario, Irwin Zito.
Okay.
And, for some of you may or may not know Irwin, but he brands himself as Mr. Hamilton. Right?
Oh, okay.
So interesting to note, I was actually having a podcast interview with his wife this morning.
Oh, there you go.
Cherry Chan, who's an amazing accountant out in Ontario. So anyways, I was presenting on stage and I was just geeking out, and I love to teach. And when I just get in the zone, I just start all my energy and passion. I just give everything I got all the time.
I've seen it. You guys have to see him live.
Yeah. And I'm sitting there, and Irwin was in the audience, and I think it came from a tweet, and he said, offering some JV Jedi strategies, or I can't even remember the tweet, but he dubbed me the JV Jedi.
Boom.
And I sat there and I go, I really like that. And you know what? I never did anything with it for the longest time. This was years ago. And then finally, about a year and a half ago, I'm sitting there and I go, what do I want to, what's my shtick?
Yeah.
What's my thing that I want to do? And I came back and this JV Jedi came back, and I went online, I searched, I actually have the domain name, jvjedi.com.
Perfect.
If you actually hashtag on any of the social media, nobody else is using that hashtag.
Yep.
Right. So it's just my way of branding a little bit. But here's the thing, is it's actually turned into a little bit of a movement, more so than I'm not the JV Jedi. My goal is actually to train others to become JV Jedis.
Similar to Star Wars, where they
Exactly.
train the young Padawan Jedis. Yes. That's your goal.
That is my entire
JV Padawans.
mission, is to train others to become JV Jedis.
And so you're doing a lot on the training aspect of it. You've got programs out now. You're doing lots of speaking. Tell us a little bit about what you're offering in terms of education, so people can tie into it and get in contact with you.
Well, you know what? Interesting. I'll try and keep this short for sake of
it's all good.
boredom. It was about a year ago, and I just kind of sat down, and I just had so many people just coming to me and asking me the same questions. Right? People were stuck. People were a little frustrated. People just wanted some answers. And I found I was answering the same question over and over and over and over again. So what I started to do is just start to digitize all the answers, right? And I would video it, and I would just start creating a training, or I put a live presentation together, and I just kept building it. And so what eventually happened was then I go, well, maybe I'll turn it into a course or a program. Okay. And then slowly what happened was it started taking off, and it became so much more than that. It's actually becoming a community where there's a group of people that are getting together to help each other solve the biggest challenge in real estate, and that's where to find the capital. So I put together this place called the Raising Capital Academy, where it's an online community of people that come to support and help each other. And I put in expert interviews and training materials and documents and everything I possibly can to help people out. But here's the beautiful thing of this, is the community is now starting to inspire each other, and the community is starting to help each other, and it's actually growing exponentially because of the community are all helping each other. And it's not just one person's voice, it's an entire community of people supporting each other.
That's awesome. And so to get access to that, what's the website someone can reach out to and try to start connecting with this community?
Well, two places. You can actually find it at my website, russellwestcott.com. There'll be a box called the Raising Capital Academy. Or the long-winded, for those of you that want to type out, it's Raising Capital Academy or raisingcapitalacademy.com/home. But easy, you can just get it from my website, and there's information there.
russellwestcott.com.
Yes.
All right. And I remember back over a year ago when we were doing an interview on the YouTube channel.
Yes.
That website was just finally launching after years of you sitting on it.
After almost 15 years. I actually registered the domain name in October 2002.
I remember.
And I launched it in 2017, 15 years later.
Yeah. Hey, at least it's live now. It's working. It's doing its thing, right?
Well, here's the cool thing, is it actually is getting 600 unique visitors a month. right, that are coming through, and people are coming there, and really I designed it from the ground up with a feeling. I want people to have a feeling when they come there, and I designed it for my core intentions of life. And my core intention of life is to, in every encounter, to leave people feel inspired, encouraged, and know that I always came from a place of love.
Right.
And that's what I designed the website for.
Perfect. Now, couple more quick things. First of all, you've got you're authoring a few books out there now. And in fact, I talked about it. I think I mentioned it maybe on one of my YouTube channels behind the scenes. The Joint Venture Secrets book. This is something that you got to be a part of. You got to share some of your insights on raising capital in joint ventures. And when we go back and when he was talking about, just talking to everyone, especially when you're getting started and come from value, using the tips and tricks in that book is actually how I got my first joint venture, which came as, again, going back to my lifeguarding days, was one of my supervisors. They just saw me pouring in the education. I was doing all these seminars. I was talking about it. I was analyzing deals on my breaks. And she says, well, on your next deal, let me know. And we might be interested, my husband and I. So we ended up structuring, it was a rent-to-own deal, so it was a 3-year term, and they put all the capital in. We both went in on the mortgage, and we ended up returning them about 17% per annum return over 3 years.
Awesome.
So, it's kind of funny how you're saying that, right?
Think about it for this to really blow your mind. Is if I wouldn't have heard that cassette tape way back in the day with Arlen Dolan on it, it would have never lit the seed of inception for me to go on my journey to eventually learn how to do it myself by doing it, to eventually write the book, which then got published, and Cam Manning gave a wonderful return to somebody. So how about those ripples that come there? And I actually had a wonderful opportunity to pay homage to Arlen Dolan this past year. Is one of the projects I'm doing is I'm out there. I constantly want to learn myself. I want to take my game up to the next level. Always. So I want to learn from the best of the best. So I started this thing called the Standing on the Shoulders of Giants interviews, where I'll find the people that are actively doing the business. No different when I first started. Surround yourself with the people, the best of the best that are doing, right? So I actually got a chance to sit down with Arlen for 2.5 hours on his ranch out in Sherwood Park, Alberta. And we sat there, and I just got a chance to just pay homage and honor everything he's done. And he got a chance to share all his experience of 20 plus years. And it was just such a heartwarming conversation. And I've done now 16 of those, and I'm committing to do at least one a month of that kind of a thing, and I'm sharing them with people.
Absolutely. And then for those interviews, is that part of the joint venture academy?
It's part of the academy right now, but what I'm doing is some of them I'm releasing. It's funny, today I just sent out an email with a 4-part interview with a person that's bought over 200 places. How did he raise the capital? How did they do that? And I'm slowly releasing some to the public, but right now it's for people that are part of the community.
Predominantly part of the community. Excellent. Okay, and then something that we're doing that's new here on the podcast, because again, we talked about your book, so I'm not going to ask you to talk about that one anymore, but I want you to give a book recommendation, something that you've either recently read or one that's stuck with you for a long time that you feel the listeners should be reading and gaining the insights from to help them with whether it's business, real estate investing, or whatever the case might be. One book that really resonates with you.
Well, I always believe in overachieving and over-delivering. I'm going to give you two. I'm going to give you an old and a new.
Perfect.
As always, the go-to is, oh my goodness, I drew a blank. Oh my goodness, I can't believe I drew a blank. It's the staple of all personal development is Think and Grow Rich.
There we go. We got it out. All right.
I've read that one so many times, and I can't believe that I drew a blank. So that's the first one, is the old. The next one is actually going to give you one that I just came across within the last couple of years.
Okay.
And it's a little different take for most people, and it's called the 5-second rule.
5-second rule.
Mel Robbins.
Okay.
For some of you, if you ever feel that you're a little bit stuck, it's a really corny title, and when you first look, and on the surface when you first look at it, you go, well, this is so cheesy and stupid. But if you actually take the time to go through it and actually take the time to implement this into your life, what it is it's a way of, when you have a thought and you have an intuition and you have a feeling of taking action to something, if you actually go, the 5-second rule is you go 5, 4, 3, 2, 1, blast off. Then you have to move forward and you have to take some action. You have to have a bias towards action of doing something towards that thought and feeling you just had. right?
Wow.
It'll get you off of that procrastination. It'll get you off the fence of thinking about doing something. It'll actually get you into motion to keep moving forward. And for some of you, if you're sitting there and maybe you're feeling a little stuck, it's called the 5-second rule with Mel Robbins.
5-second rule, Mel Robbins.
Stupid title. Actually, even a sillier concept, but if you actually dive into the book, it's got a lot of research and it's got wonderful things in there, and it works.
Perfect.
Yep.
So first one, old, was Think and Grow Rich.
Yes.
Second one, 5-second rule.
Yes.
And the interesting thing is I've asked this question a couple times, and Think and Grow Rich has come up a couple of times from different interviewees. So again, if you haven't read the Think and Grow Rich, that one's definitely a good staple. As he said, that's a very deep mindset, getting into the mindset of this.
Yep.
And you can't help other people with their wealth through, unless you have the right mindset yourself. Yep. So, and then 5-second rule, I'm definitely looking that one up myself. Yep. So guys, go add that one to your Amazon bucket list and go take a look at it. Yep. Okay, we're basically out of time here. We like to keep this thing within 45 minutes. Russell, I appreciate it. Thank you so much. Russell's been an amazing person for us in the last couple of years. He's come out and spoke several times at our events. He's been a big supporter of our team. So every chance I get to see him in person, and I gain so much every time I get to listen to him. So this, I hope you guys gain as much as I did just sitting across talking to him on this one today. Thank you so much for being on the podcast. I really appreciate it.
I'm honored to serve, and anytime, Cam, just down the hill, and I'm happy to help.
Perfect.
Right.
And that basically wraps it up for us here today. So again, if you guys are wanting to engage with this podcast, we are ramping up. We're doing a lot of interviews, and you want to ask any questions that maybe I can throw those questions out at our interviewees, feel free to reach out to me in 2 different methods, either using the hashtag ManningUpRE on both Instagram and Twitter, or if you're using the Anchor app, you can actually call and leave me a voicemail that I can play to you live on the podcast, and we can answer your questions with any one of our speakers. That's it. Again, if you want more content, connect with me on social media. I love to meet you guys. I'd love to be able to help you in any way I can. And don't forget to check out the YouTube channel, youtube.com/Cameron Manning. And we'll see you on the next one.
Right on.
Cheers.
Thanks, guys. Awesome.
Hey now, hey now, hey now, hey now.